This loss right here cost me $2,000, brother. Man, I'm gonna walk you through it. We had to take a loss here for like around 60%. I think like bro, it was horrendous, bro. It was a 1,700. Walked away with $300. You're looking at like minus 76%. So we were trading FOMC meeting last week. The Federal Reserve decided to meet and have an interest rate cut decision. Are they going to raise or are they going to lower interest rates or are they going to keep them where they are? That was the big decision that the market had been waiting on. And all right, so when we were trading FOMC meeting, right, these decisions, these interest rate cuts or these interest rate hikes, whatever it ends up becoming, they charge a lot for. No, they don't charge a lot for. They move the market a lot. They're very like economic events that impact the market. Super impactful, right? So to walk you guys through this trade, right? There's not many times in my career I've been a bear that I've been on puts. I'm a bear. No, I try to avoid the bearishness. I like opportunity, right? I'm a bull guy. I like the cause. So check this out. I never been in a bear, right? But look at this. You want to just? I hope we all align right here, just to show you guys a little bit how the odds play out. So it worked, right? My psychology was right. It was just my timing was off, and that's when I learned the crucialness of timing. I want you guys to look at this extreme bull run that Goldman Sachs has been on, right? This isn't even it. Goldman Sachs since November 25th, all the way to now, early December, December 9th, non-stop green. If you would have went long, 3 weeks, 4 week expiration, dude, you're doing like 2,000% minimum. Minimum. You're looking at like maybe $6,000, $5,000 return per contract. It's a massive gain right here. 772, 780 call options for what? 12/9 expiration? Bro, you're printing money, man. So I'm like, okay, check this out. Now let's walk through the psychology, right? What's the mind of Jerry Trades? Why did I do this? And well, looking at this bull run, not many times in my career have I seen a real drastic run like this. A lot of companies like got it in them. Maybe Tesla, yeah, sure. Goldman Sachs though, I know the banking, I know interest rates are coming down. I get it, but really, it's a generational wealth run right here, bro. 765, bro. 873. It's $118, bro. $118 in literally 3 weeks, 3.5 weeks, brother. That is nothing, bro. Nothing. That's a short amount of time for such a massive gain. And my future, I know what's up when interest rates are cutting. Go trade Goldman, brother, because you'll get rich. Alright, so we know the bull run, right? Yesterday, the day before FOMC, Tuesday, we were trading and I was watching this run. And I told my guys, and I was like, guys, Goldman Sachs is going to slow down, alright? It's at all-time highs. It hit all-time highs at 882, rejected down at 872, lost $10 in share value, and closed off kind of even. Alright? Right here, I'm like, alright guys, tomorrow's going to be FOMC meeting. We're going to have increased volatility in the market. At all-time highs, there's not many companies I know that are going to do well in in such a volatile environment and maintain these all-time highs or even go above them. Right? It's not many companies, and I think at least I thought we could all agree on this before I even enter the trade, but unfortunately, it's a much different story here. So now we're going to go into smaller time frame. Let's look at the details, right? Look at this monster. I don't know what type of bias I was just praying that this would work. Calls first half of yesterday, right? Tuesday before FOMC, first half of that trading day, bullish. Second half, bearish, gave it all back away. Alright, now let's run this back. First half of this trading day, bullish. if I flip this second half bearish, right? Well, guess what? Your boy got ahead of himself, and I entered put options here. So when I was in put options here, first contract, right? Not all of them. I was in put options here. Immediately, right here, opened up green. Boom, 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 printing. I'm like up 40%. I'm in the money, bro. I think I'm gonna kill it. I think I just sniped all-time highs. I'm like, I'm about to print. No. Rugged, man. I got the floor pulled down from under me, bro. Ride it all the way to 883. At 883, I'm literally like praying, bro. Praying that this is it. Like, make it stop. And no, sure enough, it, rejected. And now, it was like around here that I added more contracts to average down my costs. So remember, if you haven't watched the last trading recap, or actually this is going to be the next one because this is covering FOMC, which was before. On the next trading recap, you're going to watch me highlight this topic about averaging down. So if you buy at a low, right? You bought, here at a low, these puts are more expensive than they are here because now it's higher than it is lower. So my contracts here were already negative around 50%, 60%. I wanted to average down. Why? Because I want to bring my costs lower. So if my cost is higher when the share price was here, that same put option would be now cheaper because the share price is much higher. So now I understand how that correlates together. Averaging down, I wanted to reduce risk. Perfect. But I still wasn't outweighing these ones right here. So I was still in the negative even when we went down here. Now, down here, by the grace of God, I started breaking even. And I was like, there in the group chat with the guys, you were listening to FOMC, getting into it, hearing about what are the speculations, getting more informed about what's going. This interest rate cut decision is pretty big. So there we are. By the grace of God, I'm back at break even. And I don't get out. Because I was like, all right, we got this nice sell-off, right? From 883, hit this resistance, finally pushed back down to some support of 874, as we had back here. Held that. Once I seen that we held that, I got concerned. I'm like, all right, bet, we're going to reject. We're going to reject off a previous support here at 878. Started running. Now I'm negative, and I'm literally hoping that when FOMC comes, which now Jerome Powell takes the podium, that I would ever see the profits again. And look at where we took off. FOMC candle, first candle during the FOMC meeting was right here. Boom. No, actually right here. Look at that spike. It was that big tank. And I remember, bro, I was in the shower. Literally in the shower at 882 watching this, bro. And then I'm like, about to, wash off some jabon. You're about to get to it, bro. Y mocos, bro. It jumps literally from 882 to a high of 886. $4 share value gain in about 2-3 minutes, bro. It was probably one of the most insane experiences. I watched me disappear $2,000 in one candle. Once I seen that candle, I'm like, hell nah, I'm good. I lost. You can keep it. I sold the position for minus $1,700 and round that up, it's pretty much $2,000 that I lost in one trade. And I share these with you, right? So you guys understand a little bit more how to avoid these losses. Realistically, in this scenario, it was timing. And like I said, by the grace of God, bro. I had went too aggressively early on. I averaged down right here. I was break even. If you ever are in some sort of a diamond hand scenario or a difficult situation while trading and you're like on the verge, this is a very valuable position, you're super negative and you somehow made it to break even, please take it. Piece of advice from me to you. Take the money back and you live to trade another day. Seriously, because if you really think that, sometimes maybe you'll get a little bit of profits, but bro, safety over anything in this game. As long as you live to trade another day, keep that risk tight. This is a game of growing capital. It's not something you want to get too emotional and like a little bit unorganized, a little bit careless around. You want to treat it, really delicately with a lot of respect. To keep those losses minimal. And I wish I would have, learned a little bit in the scenario. Even me intuitively knew I should have gotten out. Would have been a much healthier portfolio now, but it is what it is. But that's how I lost $2,000, man. Literally just, playing this super horrible entry, trying to average down, and got the best of me this time, man. And I share the losses with you guys because I feel like a lot of people on the internet like highlight the good, the money, and even myself, right? I like to share that, but there's a lot more that you have to be careful with and have understanding when you get into this. So I hope you guys enjoy that live. If you guys want to see more of the content, subscribe and leave a like down below. Thank you guys for watching, and it means a lot to have all of you guys here. Jerry Trades SoCal Trading Group, over and out.